When you look at the world of silver accumulation, it's easy to assume that to stand out, you'd need an enormous amount of metal locked away somewhere, but that's rarely the case. The reality is that most people participating in this market hold very little, and the distribution of ownership is far more concentrated than most realize. When you cross that threshold of roughly 50 ounces, you've already placed yourself ahead of the majority. It's counterintuitive, but that's how wealth and assets typically distribute unevenly and according to principles that show up across systems. Whether we're looking at economics, nature, or networks of power, the significance of this lies not in the number itself, but in what it reveals about behavior. Most people either dabble or do nothing. They may talk about the value of precious metals. They may even buy a few coins here and there, but they don't commit. That lack of consistent action means the bar for entering the upper tier isn't set impossibly high. 50 ounces isn't something you need generational wealth to achieve. It's something you can build over time with intention. And once you cross that line, your perspective begins to shift. Stop thinking about owning a little silver and start understanding that you've become part of a smaller group of participants with real exposure. But the danger here is complacency. Reaching this level shouldn't be mistaken for completion. It's simply a marker along a journey. What you're really doing is positioning yourself differently in an environment that is constantly changing. Monetary policies, supply chain pressures, industrial demand. They're not static. Silver is both a store of value and a critical industrial commodity. And those dual roles mean its future will be shaped by forces that aren't always obvious in the present. Holding 50 ounces gives you leverage in that unfolding story, but it doesn't insulate you. The takeaway isn't to fixate on a number, to recognize how small, deliberate actions compound over time and how crossing certain thresholds changes the dynamics of your participation. When you step into that top segment, you're no longer just reacting to what others are doing. You're making moves based on your own framework. That's what separates those who endure from those who really observe. It's not about predicting the future perfectly. It's about preparing for it intelligently. 50 ounces might mark where that preparation starts to truly matter. Crossing into the realm of holding around 50 ounces changes the game entirely. At this point, you're no longer a casual participant. You've made a conscious, sustained commitment. What's striking is how few people ever reach this level, and that scarcity has implications. In any system where resources are unevenly distributed, those who commit to meaningful positions gain leverage financially, psychologically, and strategically. That's what this level represents. A shift from dabbling to intentional positioning. This is just about owning more metal. It's about what that ownership signifies. To get here, you've had to develop discipline. You can't arrive at 1 or 50 ounces by accident. It takes consistent allocation, patience, and a mindset that sees beyond the day-to-day noise of price fluctuations. That's an important distinction. Most people are driven by short-term movements. They buy when prices spike, sell when they panic, and repeat the cycle endlessly. Reaching this threshold means you've likely avoided that trap. You've built steadily, probably when others weren't paying attention. And that's a powerful position to be in. There's also a deeper resilience that comes with this stage. When you hold quantity substantial enough to matter, you begin to detach emotionally from each tick in the market. You're no longer hoping for quick wins. You're anchored by the understanding that true value plays out over time. And when disruptions hit, and they always do, you're less vulnerable to being shaken out because you've structured yourself to withstand volatility rather than chase instant gratification. That's a core principle in any sound strategy build, so that external shocks become opportunities instead of existential threats. Yet there's another dimension to consider: responsibility with more at stake. Your decisions carry greater weight. It's not just about stacking ounces, it's about how you integrate that holding into a broader framework of financial security, diversification, and adaptability. Silver alone won't save you. It's one piece in a much larger puzzle understanding how it interacts with currency trends, interest rates, and geopolitical dynamics turns what could be a static asset into a dynamic tool. Reaching 150 ounces is a marker of progress. But like all milestones, it's not an endpoint, a stage where your mindset evolves from accumulation to optimization. You stop asking, do I have enough? And start asking, how do I use what I have most effectively? That shift is what distinguishes those who simply hold from those who truly prepare a world that rewards foresight over reaction. Being here means you've already done something most never will. You've positioned yourself to benefit from a future they won't see coming until it's too late. Reaching a position where you hold around 500 ounces puts you in rare territory. It's not just about the volume, it's about what it reflects. Conviction, long-term vision, and an ability to act when others hesitate. Few ever get here because it requires more than sporadic effort. It demands consistency through uncertainty. This is where you move from merely participating in the market to becoming structurally significant within it. You're no longer reacting to waves. You're positioned to ride entire tides. The weight of 500 hours is simply measured in metal. It's measured in the resilience it affords you. At this level, fluctuations in price become less of a distraction and more of an opportunity. You're insulated from the fear that drives most people out because you've built a foundation that doesn't depend on immediate validation. You can think in decades, not days. And that's a rare psychological edge. Markets reward those who can outlast emotional cycles. And here you've demonstrated precisely that. But this level isn't about complacency. It's about perspective. With size comes exposure, and with exposure comes responsibility. It's not too enough to hold and hope. You must constantly reassess what role does this position play within your broader financial ecosystem. How does it interact with other assets, with shifting monetary policies, with technological and industrial developments? At this level, silver stops being a passive store of value and becomes an active strategic asset. You've moved beyond merely accumulating to managing with purpose. There's also a broader context to consider. Significant holdings like this place you on the right side of an imbalance that's likely to intensify as global systems strain under debt loads, currency experiments, and geopolitical fractures. Tangible assets regain importance. Being in this small group means you've effectively anticipated what most ignore until it's obvious. That foresight isn't luck. It's the result of understanding cycles and preparing before urgency forces action. Still isn't the end of the journey. It's the beginning of a new one. Having 500 ounces isn't the finish line. It's a platform. It gives you flexibility, options, and resilience that others simply don't have. It allows you to adapt instead of react, to make moves from strength instead of desperation. And that's the true value here. Not the number of ounces itself, but the strategic advantage it represents in a world where most people are content to be swept along by events they don't understand. Holding this position makes you different. It signals that you've taken control of something critical in an uncertain landscape. The challenge now is to keep that edge sharp, to remain prepared, to continue thinking independently, and to leverage this position for whatever comes next. That's how you turn metal into more than wealth. You turn it into enduring strength. The pattern where a small percentage controls the majority isn't unique to silver. It's a recurring theme across almost every domain of human activity. Wealth, productivity, innovation, even natural phenomena often follow this uneven distribution. In the case of silver, the idea that around 80% of individually owned metal is concentrated in the hands of 20% of holders reflects this same dynamic. It speaks to how systems organize themselves over time. A few participants accumulate the bulk of the resource while the rest operate on the margins. What makes this pattern powerful isn't just its mathematical elegance. It's the insight it gives into behavior. The majority often underestimates what consistent incremental accumulation can do. They either approach ownership sporadically or not at all, which leaves room for a minority to steadily gain control. Over time, those who act with discipline build positions that dwarf the collective efforts of the many. This doesn't happen by accident. It's the outcome of intentional choices compounded over years. When you understand this dynamic, stop being surprised by where the leverage is. You see that markets like ecosystems reward persistence and adaptability more than intention alone. Those who hold the majority aren't necessarily the luckiest. They're the ones who recognized early that advantages are created long before they become visible to everyone else. They position themselves when the costs were low, when the noise was minimal, and when others were distracted. By the time the imbalance is obvious, it's already entrenched. There's also a structural truth here. Such distributions tend to reinforce themselves. Ownership begets more ownership. Control leads to opportunity, which leads to more control. The few at the top of the distribution often have the means, knowledge, and mindset to keep expanding their share, while those outside it struggle to catch up. This feedback loop is what makes the pattern so persistent. It doesn't require manipulation. It's simply how compounding advantages work. For anyone looking to navigate this landscape, the lesson is clear. You can't change the existence of the pattern, but you can decide where you want to exist within it. Recognizing that a minority will always hold the bulk shouldn't discourage action. It should clarify it. If you want to benefit from this reality, you have to become part of the minority that acts early and consistently. That's what gives you a stake in the system instead of leaving you subject to it. Ultimately, principle isn't about numbers, it's about positioning. Understanding the asymmetry in how assets are distributed allows you to see past the illusion of fairness that markets often project. It reveals where the true power lies and what it takes to claim a share of it. And once you see it, you can never go back to thinking like the majority again. When you look closer at these numbers, you realize they're built on layers of assumptions. The headline figures suggest that a certain amount places you among the very top, but the reality is often more nuanced. Significant portion of silver in circulation isn't in the hands of everyday individuals. It's held by dealers, refiners, small businesses, and even institutions managing inventories for industrial needs. When you strip that out, the thresholds for being among the leading individual holders could be far lower than most people think. Some estimates point to a figure closer to 100 ounces as enough to stand in the top tier of personal ownership. While we can't know the exact figure, the possibility itself is telling this matters because it reshapes how we think about opportunity. If the true bar for being meaningfully positioned is lower, then far more people have the chance to reach it than they realize, yet paradoxically few do. The psychological barrier is often greater than the financial one. People assume they need vast resources to participate in a meaningful way, and that belief keeps them passive. Meanwhile, those who understand the reality quietly build positions that will put them ahead when circumstances shift. The speculative nature of these estimates isn't a weakness, it's a reflection of how complex and opaque real-world systems can be. Markets rarely give perfect transparency, and expecting them to is a mistake. What matters isn't knowing the precise number, recognizing the structural dynamics at play. If most of the supply is tied up in channels that don't represent individual holders, then each ounce in private hands carries more relative weight than the market narrative suggests. This is where foresight becomes critical. When you operate with imperfect information, your edge comes from interpreting patterns rather than chasing precision. Seeing that the true distribution might favor those who act decisively, even on partial data, can be the difference between leading and lagging. You don't need certainty to position yourself. You need conviction, grounded in an understanding of probabilities. Ultimately, the takeaway isn't about whether the threshold is 500 ounces or somewhere in between. It's about grasping that there is a threshold and that crossing it gives you options others won't have. whether the number is inflated by institutional holdings or understated by fragmented reporting, doesn't change the underlying truth. Meaningful participation comes from consistent action, not perfect. And when the environment eventually forces people to confront scarcity or value shifts, who took the speculative risk of preparing early will find themselves in a position of strength, while those who waited for certainty will be left scrambling. In closing, let me leave you with this. Holding 50-0 puts you above most. 150-0 places you among the serious. 500-0 elevates you to the global elite of stacking. These are not arbitrary. They emerge from patterns of how silver is distributed among individuals. The real power lies in knowing your benchmarks and moving toward them with purpose. Understand the system, know your metrics, act with conviction. That's how you build not just a stack, but mastery.